Today's webinar is a response to the positive feedback received on the April Gender Finance webinar, hence the repeat. Today's webinar is hosted by GAMFIN and CAPLAS through our partnership with Mastercard Foundation to strengthen Ghana's non-bank financial sector. The program is called FIRST Plus, which stands for Financial Institutions, Resilience and Strengthening. Now, FIRST Plus addresses common challenges across the industry through webinars like this, workshops and training seasons. CAPLAS also provides one-to-one technical assistance to financially solid financial institutions that are committed to scaling MSME finance. Now, note that at the end of the webinar, we will provide contact information if you would like to learn more on gender finance. Increasing the availability of credit to women is one of the FIRST Plus and Mastercard Foundation's priorities, and it's especially relevant to Ghana, where many women are business owners. We are excited to share this webinar about gender finance. We all will learn a lot. Now, today's webinar is being led by Maya. Maya has over 22 years expertise in financial sector, pioneering digital transformation, women empowerment program, financial and non-financial products and service development, brand marketing and strategy. Maya led and implemented PLC Bank's We Initiative, the first program in the MENA region dedicated to the economic empowerment of women. During Maya's tenure, the program's IRR reached 33%. She's an SME and gender consultant for International Finance Corporation, IFC World Bank Group in Africa, Middle East and Asia and Central Asia, Throughout the webinar, we encourage you to submit questions for Maya in the chat box, and we'll address as many as possible at the end of the webinar. Note that the webinar is being recorded and we will send you the link after the webinar. Now, Maya, I turn over to you. Okay. Maya, you are still muted, so you can unmute. Yeah.
I should have learned this by now. So hello, everyone, and I'm so excited to share my experience with you today on gender finance that I've been doing for the past 10 years, that I've started, as Nathaniel has mentioned, at BLC Bank in Lebanon. And I've extended this experience into other countries, Central Asia, Africa, and the Middle East. So thank you so much for participating. And I look forward to getting as many questions as possible from you guys so that we can really have an engaging webinar. And before I start, I just want to mention that we will be sharing with you at the end of the workshop a simple self-assessment questionnaire. So you can download this questionnaire and use it to assess your current gender finance initiatives. I'm sure a lot of you have good gender finance initiatives. So you will be able to assess where you stand today and where you want to improve and the areas of strength you have as well. So you will be looking at 5 key areas: your strategy, your performance, the organization and HR, the market knowledge you have, the products and services, as well as the distribution channels, marketing and communication. And last but not least, and which is very important as well, is the client data analysis. I'll be discussing this a little bit further. So I encourage you to please do this assessment during your upcoming senior management meeting. Let's suggest that, so that you can really be able to identify where you're going to go on gender finance, and based on the knowledge that you're going to learn today in the webinar. So I will be discussing the business case for women's financial inclusion. So you are aware of the available opportunities in Ghana. I will explain as well gender intelligence. What is it and how to apply the gender lens. And I will share good practices of other financial institutions' gender inclusive programs. As well, I will discuss the approach on the way to lead gender finance, so you will be able to identify how you can develop further and implement your gender inclusive program. So our objective for us today is to have you own gender finance knowledge and the know-how and be able to integrate it as part of your activity. So I reiterate, please write as many questions as you can in the chat as we go along, and I'm ready to address them at the end of the workshop. Let's start with gender parity. So what if women and men were truly equal? As per the World Bank's 2022 report on the laws and regulations that restrict women's economic participation in 190 countries, there are 2.4 billion women worldwide that are still not afforded equal economic opportunities. And Ghana scores 75 out of 100 on explicit discrimination in the law that affects women throughout their lives, indicating that women have just 3/4 of the rights of men. So noting that according to the 2018 PwC Women in Work Index, increasing the female employment rates in OECD countries could boost GDP by over $6 trillion. So I know while our role today is not to discuss the law, we can make a difference when we identify the barriers and the challenges faced by women and be able to affect change where we have the power to do so, of course. Now I'll share with you a little story of that I was affected by. When I gave birth to my child 16 years ago, I was working at BLC Bank in Lebanon and had been working there for 10 years before I gave birth. So I go into the branch. I'm not aware that as a mother in Lebanon, the law does not allow me to open a bank account for my children. Because it's a discriminatory law, unfortunately, only the legal guardian, and in this case, it's the father, who can open an account for his children or our children. So what I want to say is when we started the program at BLC Bank, the first thing we did actually was address this issue and find a way around the law to be able to provide women with the opportunity to open bank accounts for their children. So this is the example I would give to be able to address what are the gaps that are there or the challenges that are faced by women and how you as a financial institution will be able to support them and advance their economic participation. Now that we've established the global opportunity, I'll share the business case on women in sub-Saharan Africa and specifically Ghana, for you to be able to better understand the current context and the available market opportunities. So the question is always, one, what's in it for the financial institution? And second is, why should you venture into gender finance? So stay tuned till the end of the webinar today, because I will have answered these two questions by then. So here is the opportunity in sub-Saharan Africa. There are more women-owned MSMEs at 58% compared to around only 30% globally. $42 billion is the estimated unmet credit need for women. So it's the difference between the supply and the demand for credit. And only 20%, around 20% of women are able to access long-term financing from financial institutions. So you see there's a gap, a big gap there of how much credit is unmet and only how many women are able to access long-term financing. So as per the World Economic Forum 2018 Gender Gap Report, it examines the gap between men and women across economic participation, educational attainment, health, and political empowerment. Sub-Saharan Africa ranks third with 33.7% gender gap out of 8 geographical regions, and it's only preceded by MENA and South Asia. So you're better off in Sub-Saharan Africa than we are in the Middle East and North Africa. At the rate that it's going, unfortunately, it will take 135 years for Sub-Saharan Africa to close the gender gap. However, the good news is two African countries, Rwanda and Namibia, have made it to the list of the top 10 most gender equal countries. So the question is, why not have Ghana make it to the list too? Now, what is the specific context for Ghana? 46.4% of businesses are owned by women, and this is a very high number, even though women in Ghana may be marginalized in terms of business opportunity, professions, education, and they do have unequal access to finance. They actually outperform the global peers with very high women-owned businesses. And I'm in awe, by the way, of Ghanaian women, because I visited Ghana 2 months ago and I've stayed for 3 weeks, and I've seen how powerful they are, how smart women in Ghana are, and how persistent they are to succeed. So we ought to give all women in Ghana the opportunity to be able to grow and close the gender gap that I'm going to tell you right now. That only 9%, actually 9% of the informal labor force are women. And the gender gap that I was mentioning earlier is 8% between men and women with a bank account. So less women have bank accounts than do men. And the most important point is only 10% of women report borrowing from a financial institution. So as a result, access to capital seems or is actually the woman's biggest obstacle to doing business. One more thing, $6.1 billion is the estimated credit gap for all MSMEs, not only women, so all MSMEs in Ghana, which account for 13% of the country's GDP. So what does that mean? By providing more credit to MSMEs, we will be able to positively impact the growth of the Ghanaian economy. It is also estimated that MSMEs contribute around 70% to the Ghana's GDP, just to reiterate the point of impact on the Ghanaian economy. And agriculture is the largest sector in Ghana. I visited the Western region and I've seen amazing landscapes. The main exporter and it is the main exporter and employs nearly half of the workforce. So in 2018, only 3.7% of the bank's loans went to agriculture. This is suggesting that the sector really faces a big finance gap, and it is directly affecting women. Why directly affecting women? Because you all know that women are significant contributors in agriculture, and research shows that 70 to 80% of the food consumed by the country is contributed to by women farmers. So I'm going to proceed. I'm assuming you don't have any questions. I don't see questions in the chat. Now I will be asking a question here based on all of your experiences. What are the constraints that women face in Ghana? And please, if you would write your answers in the chat, I'd really like to get you engaged and learn more from your experiences as well. So the question is, what are the challenges and constraints that are faced by women in Ghana? So lack of information on where to raise money, indeed. The biggest challenge actually that women are facing is the access to finance due to the collateral limitations and the high interest rates, as financial institutions base their credit assessment mainly on collateral or immovable property. So rather than cash flow based lending, which is being used by a lot of other financial institutions. In Ghana also, the value of the required collateral is estimated at an average of 240% of the loan amount. And this is very high compared to only 120% for Lebanon, and which is also higher than the sub-Saharan average as per the World Bank report. So there's also the rights to hold land, which are entrusted typically to men and which constrain women from accessing loans. So there's no legal issue in this case, it's only social and cultural norms. Also, there's lengthy process for registering business. According to the World Bank's Doing Business report, it takes 12 procedures and 81 days to start a business in Ghana. Fourth is access to training programs. So to improve entrepreneurial skills and financial literacy, because women tend to lack business, digital literacy, and skills as well, such as marketing and leadership skills. And they tend to have low confidence in their ability to successfully operate businesses. Fifth is cultural biases and social norms, which govern the different roles and expectations to men and women in the society. So women, of course, are expected to do more household work, take care of the family, and men are expected to be breadwinners. And this is the case in all the countries that I've worked for. So it's not specific to Ghana. These are the same challenges that most women are faced with across the globe. The sixth and not last is women are the caretakers of their families. So they lack time and they are struggling to balance between work and life. And I'll add to the point that you mentioned, that they have lower access to knowledge of where to get the financial, access to finance from the financial institution. And you all mentioned as well limited ownership of assets. So moving on, more specifically in the agri-business value chain, so women have limited access to inputs due to lower access to funds. They also have lower productivity and face higher levels of post-harvest loss than the male farmers. Why is that? Because they harvest over a longer period of time due to their time constraints and their lower access to hired labor. Women also have lower access to market information to be able to competitively participate in and benefit from market, depriving them as well from first-hand opportunities to generate income. They are as well less likely to access market linkages or brokers and traders who are typically men, giving women fewer entries to markets and income generating opportunities. And one more point, women in rural areas have lower literacy and digital literacy than men. So this will limit their uptake of and adoption of the available digitally enabled marketplaces out there. So why am I sharing with you all of these challenges? To say typically that women have constraints that are different than men, and providing gender smart solutions such as access to credit, trainings, and market opportunities or networking opportunities will be able to address these challenges and provide better opportunities for their growth and advancement. The good news is that in Ghana, there is an enabling environment. So the Ghanaian authorities have launched several strategies and development plans to be able to have better financial inclusion, not only for women, but for the unbanked and the underbanked as well, so men included. The point is, there is no reason why financial institutions should not be able to provide better opportunities for MSMEs and in particular for women. I know, by the way, that I've met a lot of financial institutions during my visit, and I'm aware of the few constraints that you are faced with. Maybe we will discuss those in the Q&A after the end of this session. But one more thing that I've learned is I was aware of the Act number 930, in which the Bank of Ghana authorizes the provision of collateral-free loans. So I'm assuming there is nothing stopping you from adopting a cash flow credit assessment model to be able to extend loans to businesses, especially those owned by women. Anybody would like to comment on that? So I see you all agree with me. No comments. Great. Moving on, I would like to share with you some common myths and explain the rationale to demystify these misunderstandings. So please answer true or false to these statements and explain why. Are we ready? So I need more engagement from you guys and ladies. The question is, financial products are gender neutral. It doesn't matter if the customer is a man or a woman. Is this statement true or false? Oh, thank you so much. Really, I see all of you participating. Okay, so the answer is actually false. So women have specific needs and face different challenges than their male counterparts. So the points we've already discussed in the previous slide. Providing gender smart solutions by modifying your existing products and services, or even developing an innovative product, will lead to increased customer acquisition, higher cross-selling ratios, and increased profitability of the financial institution. So the answer is false. The second statement. Gender finance is about providing specialized products to women only. Now that I have said that we do need to address products and services from a gender lens, does this statement make sense? Is it true or false? Gender finance is about providing specialized products to women only. So indeed, it is false. It surely does not mean providing specialized products to women only, because gender finance is about including women and not excluding men. The financial institution should have a holistic value proposition, so a promise of value that it will be able, the financial institution will be able to provide solutions to the needs and challenges of the woman, but while doing that, you will be able to address the gaps that are there for both genders and actually provide those products and services to all your customer base. Does that make sense? So I will give you an example. Let's say the financial institution decides to ease the collateral requirements and provide cash flow based lending. So automatically, you will surely be able to provide it to men as well. You will not exclude men, will you? I'm sure not. So when you look into your products and services from a gender lens, you will be able to provide the same product and service to men as well. And this is exactly what happened with us at BLC Bank. So we modified and developed two products actually. And these products, of course, only one of them was extended to men because the other one, men already had that, which was opening an account for their minor children. So when you have the woman in mind and you do products that are with a gender lens, you'll be able to provide those products to all your MSMEs and all your businesses and all your clients, and they will be happier clients, by the way. The third statement. Women-friendly products and services alienate male customers. Is this true or false? So indeed, the answer is false. As research shows across the different countries where gender finance programs have been developed and implemented, the male spending is not negatively impacted, and what is woman-friendly is considered everybody-friendly. So I've experienced this firsthand when I was leading the Women Empowerment Program at BLC Bank in Lebanon. To be honest, at first we had feared that the program will not be well received by our male customers. But on the contrary, they became advocates of our program and would actually refer us to potential women clients. The fourth statement, since my portfolio is made up of more than 50% female customers, then I'm already applying gender finance and I don't need to invest further. I think this is the golden question that have been asked by a lot of rural and community banks, microfinance institutions in Ghana. Most of you have a portfolio that exceeds 50% female customers, so you don't need to apply gender finance and you don't need to invest further. Is it true or false? Yes, you can attract more females when you enhance your female finance products and services. Thank you, Winfred. Indeed. Indeed, I'm happy that we all agree that it's a false statement. So the gender finance is much more than having 50% of your customer base being women. What we want to really look at is, are we addressing all of the needs that women have or the challenges that they have? Are we providing support not only on the financial level, but on the non-financial services that we can provide? So are we supporting them with trainings? Are we providing networking opportunities for them to be able to find suppliers and buyers for their products? Are we as well able to scale these women from the micro businesses to transition them to become small and medium successful businesses? This is really very important. So what are we able to do that will really support the advancement of women and the success that they will achieve with our help? So I would also like to mention one more thing. When we're looking at women externally, we should also be looking at women internally. So when we go and say we're a gender finance bank and we support all women customers, how about supporting our women employees? So we want to look at women in the workplace. Are you supporting these women to grow their careers and climb into more senior positions? I know that a lot of senior positions, as I've seen and as you know as well, in several financial institutions across the world, the top management and senior management are held by males. And this is great. What we need are male champions of change. So it's with your support that we will be able to have the path for more women to be able to succeed and grow into higher positions. I see someone raised a hand. Would you like to ask the question now? Vivian?
Okay, I think Vivian, I think you can put your question in the chat box so that as we continue, you can write it down after the presentation. Then please, you can ask it. I'm seeing some few questions here, so when you finish presentation, Maya will ask them, and then you'll be able to, address them. Thank you very much.
Thank you, Edmund. So I move on to the last question. Investing in gender finance is time-consuming and costly and does not pay off. I'm going to say the answer because it's of course false, and I will give the explanation in the following slides. So financial institutions who focus on women have found that women are a great and profitable market segment for them. So what are the business opportunities for banking women customers? First is increase in market share. So when the financial institution provides relevant products and services based on the needs of the individual segments, they are able to acquire new clients. Also, with a well-structured women market strategy, the financial institution will be able to differentiate itself from competition and establish a reputation as an innovator. Its market share will automatically grow. Also, women value relationships and respond well to relationship management-based models. So they don't usually consume transaction. It's not about going to the bank and getting a transaction. They need somebody to talk to. They love to have a relationship with the bank. So they are loyal customers. If the financial institution is able to provide this relationship, they become loyal customers and they buy multiple products. And as well, may be able to influence the family income and how it is spent as and you may be able to get more customers from the woman if she is happy. So the family wallet of that lady will be banked with you, if I may say that. Women as well are good savers. Their deposits typically grow at a higher rate than their male counterparts, and they tend to stay longer with the financial institution. And the last but not least, women clients tend to take lesser risks and are very good payers. Their default rates are either small or same as the man, or sometimes even better than the man. Actually, there are, I would rephrase this statement, their non-performing loans are lower or better than the men. And I'm sure you would all agree with me on this point. You've seen it in your own books. Women are good payers. So to back this business opportunity with the numbers, the data from both the IFC and the Financial Alliance for Women prove the case. So on the left side of the slide, you will see the year-on-year growth rates for 2016-2017 that show that women outperformed men in the number of customers growth, the number of the credit volume growth, and as well the deposit volume growth for 30 financial institutions who are members of the Alliance. On the right side of the chart, you will see lower non-performing loans for women than men from 2017 to 2020. This is based on a sample size of 115 to 133 financial institutions within the network of IFC. So it's in your books and it's in all of the financial institutions' books as well. The second part of this webinar today is what is gender intelligence and how can we apply the gender lens? Shall I ask you the question for you to give me your opinion or your feedback on these two questions? So what is gender intelligence and how can we apply the gender lens? Okay, I'll give you the answers then. Gender intelligence does not mean benefiting from a single gender, but actually creating benefits for both men and women. It is about understanding the differences that exist between genders, not only from the biological aspect, because we all know that biologically we're different, but from the differences that are actually influenced by the family, the education, the culture, and the environment as well. I will give you an example. So at BLC Bank, what did we do to address this? For the women employees, we all know that women tend to drop out of the workforce due to mobility constraints. So they want to balance between work and life and they're not able to continue in their career. So what we did was, in addition to the maternity leave that is allowed legally, we extended 2 additional months at a part-time employment, but with full pay. So mothers were able to return to work and to reduce, and we were able to reduce the dropouts as well. What we did also to balance this out is we provided paternity leaves, because in Lebanon, at the time, we didn't have paternity leaves. So we extended paternity leaves just as a balance for both genders. This is for women employees, but when it comes to women customers, on the same example, maternity, women tend to have challenges when they give birth as customers because they're unable to go back to work and to be able to settle their loans, you know. So what we did was provide them with maternity payment breaks. So for the mother to be able to accommodate for the low productivity period after the childbirth, we allow 2 months payment breaks. We don't charge delay fees, and we stop the loan for a while, and then for these 2 months, and then we reactivate when she is able to go back to work. And this is exactly what we talk about, innovating with a gender lens. So we do not want to tolerate we do not only want to tolerate the differences between genders, but we also need to address them and provide equal opportunities, as I've shared the examples. So it is also about giving each person what they need instead of giving the same to everyone, and allocating resources, programs, and decision-making fairly to both men and women. I reiterate that it's not about excluding men, it's about including women. The result will be a win-win-win and win situation for the people, for the clients, for the institution, and for the economy. For a financial institution to be gender intelligent towards its customers, it helps to be gender intelligent internally as well. And I've addressed this point earlier. So what can the financial institution do to be able to address its women employees? And how is this important for you as a financial institution? So what are the impact? Improved decision-making and innovation for the financial institution, relevant products and services, balanced leadership and performance. You will be able to attract and retain a wider talent pool as you will become the financial institution of choice for women employees, and it will also impact your bottom line. I would like to mention only a few things here. Research shows that women earn 77% of what men earn for the same job. So there is a salary gap everywhere. It is important to be able to provide equal opportunities and to be able to close this gap. I would give you an example. What we at BLC Bank did. We set a target to reach 50% women in top management. We developed as well a scorecard to monitor the gender equality on recruitment, promotion, and close the salary gap for the same job positions. As a result, we reached 51% women employees by 2007, up from 47% when we started the program in 2011. So this is a very important slide, and I would really like to share with you how do we apply the gender lens. There are 6 key pillars to applying the gender lens, and I'm going to start one at a time. First and most important is, and a prerequisite, actually all of them are important, but it's a prerequisite for the financial institution to be able to develop a gender finance strategy. We have to do a demand assessment, so a market research to understand the needs of women, the particular needs of the women, and to be able to understand as well the supply and the ecosystem players. So other than that, we will be moving gender blind, and we will not be able to address the particular needs of women. The second point is the financial institution needs to align internally. So in terms of the training of the staff on being more gender smart, allocating a dedicated team to deliver on the Women Market Program, and develop the sales and distribution channels, including the digital channels. So one of you kindly mentioned that women may not be aware of what is available. So sales and distribution channels and being able to reach these women is very important. The third is products and services customization. Developing and customizing these products, I've mentioned it previously, is very important. The range of products, I will discuss it in the following slides as well. We not only want to look at the different women segments and the sectors that they are in, we also want to look at their life cycles or the critical moments they go through and how you as a financial institution can support them with the life cycle. We want to look at the processes and how we can optimize and streamline these processes. So number of documentations that is required, ease of opening an account, what else? So collateral requirements, I've mentioned this earlier. The fourth, we want to include non-financial services, because this will complete the range of services that will provide a 360-degree, as we say, service to women. And by the way, I would like to mention something, and which is very important. Maybe I mentioned it before, that when we developed in BLC Bank the non-financial services, we extended those services to men as well. So automatically, it is important to provide a full-fledged financial and non-financial services to address the needs of women and men equally. Fifth is the distinct brand. So because we want to reach these women, we need to have a targeted communication. We need to create the awareness and to be able to influence positively the change in the norms and attitudes of those around the woman. So maybe we do gender sensitization training. We do awareness campaigns where we help the nation understand the power of women and what are their challenges and how we can help break those barriers or those biases that are against women. The sixth is data and customer management. So what gets measured gets done. It is very important to have a gender disaggregated data. So we look at our data from a gender perspective, men versus women. And in this case, we will be able to identify the discrepancies or the gaps that are there. So in the data that I've seen in other financial institutions, we see lower loan amounts for women than men. We see higher interest rates for women than men. We also see lower loan periods for women than men. So when we identify those gaps, we will be able to address them. When we also want to launch a full-fledged program, we will have established the baseline where we are today and where we want to go, and we will set the key performance indicators or our targets, and we will launch the program. What we'll do is we define a clear roadmap and roll out and monitor the program and realign as we go along. So it's not a launching of the program and then we forget about it. We measure, look at our performance and realign accordingly. So I'll share with you two good practices on women financial inclusion programs that were deployed in Ethiopia and Myanmar. There are three additional case studies that we'll share with you at the end of the webinar, along with the session recordings, by the way. So the first case is the World Bank launched in 2013, the Women Entrepreneurship Development Program in Ethiopia. So there were 12 microfinance institutions that participated. The program focused on growth-oriented women entrepreneurs. And they shifted from small group-based lending to individual loans. And this is the trend going forward, that it is important to address individual loans, because this is the opportunity that will allow women to be able to grow individually. As long as they are within the group, they will be limited to the group's capacity in some cases. The MFI as well, the MFIs in the case of the World Bank, they developed new loan products and they accepted new forms of collateral. So new forms of collateral such as the vehicles, personal guarantees, and business inventory instead of only real estate or land. Even more, and to be able to overcome the challenge of collateral requirements, the MFIs used a digital psychometrics credit score. So we're still looking at moving our credit assessment from a standard assessment to cash flow based lending. These guys moved to a psychometrics credit score. So they were evaluating the entrepreneur's personal attributes, from the control, intelligence, impulsiveness, confidence, and actually the results revealed that women who scored high on the psychometrics score were good payers, and they paid 7 times better than women who scored lower on this psychometric test. And with this test, they were able to remove completely the need for collateral requirements. So this is very innovative. They also innovated in the training. So they combined business skills with mindset-oriented training. These are psychology-based trainings that help business owners to think and behave like an entrepreneur. And the results, 12,000 loans were disbursed to women entrepreneurs, of which 66% were first-time borrowers. They were able to reach 16,000 women and train them. And the rate of the loan repayment was very high. So the NPL is less than 1%. The average loan size increased to $12,000, and it increased by 870%. Also, the loan appraisal that they adopted, where they were able to reduce the collateral requirement, the value of the collateral requirement to 125%, of course, for those who they requested a collateral from. And the program also measured the impact of the funding and the training on the participating women's businesses, and found out that they increased their income by 41% and increased employment by 56%. The second case in the UN capital is the UN Capital Development Fund, who worked with 3 microfinance institutions in Myanmar to develop gender-smart microfinance products addressing 3 segments. These segments were women micro-merchants, women farmers, and women home-based workers. The segmentation was the first was the result of a market and customer data analysis. As I've mentioned earlier, it's important to do market research, and this is where you can identify your segments from. And they also moved away from the assumption that women represent only a single and uniform segment. So there are a lot of women out there, and there are several segments and several sub-segments as well for women themselves. The recommendations that they provided to the MFIs included focusing on women's financial independence and transitioning from group to individual loans, build the MFI's capacity and the organization alignment. As I said, it's important for the organization to be aligned and to be trained. They provided as well a recommendation that the institution should do, financial institutions should do financial and digital literacy trainings to the women, and further develop the MFI's digital channels and tailor gender smart products based on the insights that they got from the market research. All of these recommendations were to address the challenges, and these challenges that you see on the screen are exactly the same challenges that we mentioned about Ghanaian women as well. How will these microfinance institutions in Myanmar apply these recommendations? First, they will launch an awareness raising campaign for women and support them in graduating them from group to individual loans. Second, they will provide detailed information on the individual loan offerings, such as the interest rate, loan period, repayment schedule, while also highlighting reduced registration requirements. Third, they will be able, they're going to address the complex and time-consuming process of making physical repayments at the MFI and the branches. So the microfinance institutions will digitize their credit and loan repayment system to allow women to repay using digital finance. And finally, offer non-financial services from training on financial literacy to linking the businesses to the digital marketplace. Edmund, how am I doing on time?
Yeah, we fast running out of time, so you can run up from here. Yeah, I know people are also interested in listening to what you are sharing. So I think that we'll give you some few minutes to be able to run up on it. Thank you.
Thank you so much. So this is my last section. So it will not be long, but this is a very important section because I discuss how are we going to lead on gender finance. So first, we apply a go-to-market framework, starting with an internal and external analysis. So for the sake of time, I'm not going to repeat everything that I've mentioned before. Conducting an internal analysis on the customer profiles. If we're not able to do full-fledged market research, let's look at our data internally. It will give us a lot of insights, and we will also be able to identify the different segments. And we can as well do a focus group with those women and understand better how we are serving them, what are their challenges, and how we can innovate. Second is adapting our products and services. So here we recommend applying a human-centered design process to modify the products and underwriting practices to better serve at least one woman segment. So if we're not going to be addressing all of the women segments that are in Ghana, let's at least identify one woman segment and work on that. And then we phase the program to other women segments as we go along. The recommendation, if you need to access a training on human-centered design, then please check Acumen Academy. I think it is for free. It is for free. I I know it is for free. They are only asking for a donation of $40, but you can still take it for free. There's also one thing that may help you. You can encourage those women savings group and the women customers who are faced with literacy and digital challenges to use Hey Sister, Show Me the Mobile Money. So this is online, you can find it, it's free of charge, it's available in English and several Ghanaian languages, and it supports, provides financial education on, provides education on digital literacy. Third is the resources. So aligning the organization, training the staff on gender intelligence, developing the sales and distribution channels, and setting the KPIs to target and monitor the program. Fourth is partnerships. So developing partnerships is very important. Sometimes there are women associations, chambers of commerce, the government. These are able to support you in reaching the women segments that you are targeting in a faster manner as well. You can also develop B2B partnerships, so business to business partnerships, where the wholesalers will be able to finance women MSME distributors. So you do a partnership and see how you can be able to get those women retailers, finance those women retailers, customers of the wholesalers. I'm sorry, just a minute, I want to drink water. Okay, so, okay, the idea is you can develop partnerships with retailers as well for consumer loans, such as mobile phones and computers. The last point is communication, developing the media plan and the marketing material, communicating internally, and launching and adjusting your program after you monitor all the results. I want to recommend two things here. No pink washing, please. It doesn't mean if we're communicating to women that we have to paint the flyers in pink. We're talking to the mind and not to make it flowery. I also recommend top-down communication. So when the top of the pyramid at the financial institution is committed to supporting and delivering and advancing on gender finance, then everybody else will follow. As well, bottom-up communication is very important because we will be able to know more what is happening on the ground and how we can recalibrate our program accordingly. This slide is what I had mentioned earlier. We have several women segments. We not only want to provide a value proposition for these women, we want to look at the critical life moments they go through or at their life stages. So women go through, they want education, they are entering the workforce, they are starting or scaling their business, they are investing in a home, they are buying a land, they want to have children, care for them, and for their elderlies. It is important to tailor these financial products and services and non-financial services to meet the different life stages that the women go through. So I will just give a quick example here. It is not a one-size-fits-all strategy. You may provide access to markets for these women by linking them to credible suppliers to source their products. Provide training on how to do their bookkeeping and how to manage their cash flows and finance their working capital at a lower interest rate with reduced collateral requirements. Last 2 slides, and I promise I'll be done. So I know that your main concern would be the resources and the budget to start and scale your gender finance program. I'll share with you only a few quick wins. I may have touched upon them previously, that if you are constrained with research, you undergo you conduct an internal assessment and you interview your own women clients, looking at your own data, policies, and processes, and do your own desk research. You will be really able to identify a lot of ideas and gaps that you can work on. Mobilizing your staff as well, because you have experts in your institution that you can have who can provide the financial literacy trainings. You can maximize reach as well through the B2B partnerships and through other partners who are aligned with your own vision and can help you reach a wider target audience. And service delivery, looking into your existing processes that you can streamline as well, because it is important to provide a fast service, improve on your turnaround time, and reduce the documentation requirement. Last is there are a lot of low-cost media channels. So going on those low-cost channels can as well, such as the radio. I've heard a lot of radio in Ghana in the morning shows. Everybody listens to the radio talk shows. So this is a way for you to reach more women customers as well. In summary, why is it important to have gender finance? First, to contribute to women's financial inclusion, which leads to their sustainable growth and helps develop the national economy. 2, to create a differentiated competitive edge and become the financial institution of choice for women. 3, to increase your client acquisition, activation, and cross-selling ratios. And 4, to diversify your risk portfolio because women have lower NPLs. And all of this will lead to an increase in market share. And I come to the end of my presentation. Really, thank you for your time. I only want to close with a statement that previous UN Secretary General Ban Ki-moon said, there can be no planet B because there can be no plan B because there is no planet B. The time is now. We don't want to wait really another 100 years for the gender gap to close. Women in Ghana really count on you. Thank you so much for your time. I will now open for questions.
Right. Thank you so much, Maya. Wonderful presentation out there with information sharing in there. I think that is great. As much as people were following your discussion, there are some few questions that people set in to ask. Somebody asked a question and asked that, does bank assurance form part of a non-financial service? But he wants you to be specific to tell us what are some of the examples of non-financial services that you're talking about.
Okay, so non-financial services are training usually. So there's access to information. When you want to provide women with more information, you can do that through several ways. Develop a website where women can access this information. The information has to be relevant for the women and their businesses. You can do access to information through webinars or trainings on the ground. So financial literacy, digital literacy. There's also access to marketplaces where women can be able to network with other, to be able to find suppliers and buyers for their products and services. So Did
Go
I
ahead,
answer your
please.
question?
Yes. Yeah. So it's more of the capacity building, among other things that you do with the women. That's great. So I think that answers the question that Winfred asked. A quick one. Another one too is saying that it's like the presentation is focused on the clients, but this person is saying that, look, I also have female people I work with, and if I give them all the help that I give them, among others, they end up going out there, they end up leaving me for good, among others. So the question now is that how can you also support your internal, especially the focus is on the women who are in my organization. How can I focus on them, treat them, or give them all the specialty among all the professional support and all that, and still keep them to work with them? Because at the end of the day, as I do all these things, it is cost to me as an institution.
Now, the last statement is not accurate. It is not cost to the institution to be able to provide training for its employees. So you're providing training for your employees, be it men or women, to be able to provide a better service for your customers. So when you nurture and take care of your employees, they will be happy and loyal to you and will be able to deliver more. But specifically to women, all you're doing is one training that says how can you actually improve your confidence level and stop doubting yourself, or so these are trainings that can happen not with a cost. So any senior manager who is a role model, she could be another woman or even another man who can provide those trainings to these women in the financial institution. And then the slide I showed that from the research and from other financial institutions, when you have a gender balance internally, your profit increases. So if you want to really put a cost into it, it cannot be mentioned as a cost. It will be an investment in the increase in profitability for your institution.
Okay, all right. A quick one. What is your view on how to reconcile international financial reporting systems requirement on collateral with when it comes to cash flow lending? That's a huge one, I know.
Yes. No. No. I will give this question back to Capital Plus, because Capital Plus and the First Plus program are supporting financial institutions in Ghana to actually develop this cash flow based lending model and digitize the credit assessment. So Capital Plus with the consultants on the ground are doing a great job on this level. So those who are interested, maybe you can go through GAMFIN and Capital Plus on that.
All right, so we'll pick it up. I think we'll pick it up. A quick one also, somebody wanted to find out some, you made mention of the psychometric credit score. I think that people are very interested in that area. Will you make that tool available for us? That is somebody saying that whether we can have a scoring tool for that one.
Unfortunately, I personally do not have it, but I shared with you the case study that the World Bank had developed that tool for Ethiopia. Now, what others are doing, not only the World Bank, but fintechs as well, they look into their credit assessment and they give a positive discrimination to women to be able to have more women approved in loans. So these are two advanced ways of looking at it. Let's start with the smaller steps, moving from only collateral-based lending to cash flow-based lending, and then innovating with the rest.
Okay, Maya, quick one. Let me ask you this. You have talked about we becoming more gender focused in our discussion. Wonderful presentation among others. Now, in terms of the level of my sector where I operate, the first thing is that whenever you tell me I should implement something, it's about costs, it's about time. Looking at you being a pioneer within these programs or being a champion in these programs, what is the budget like? I mean, to be able to implement a gender finance program, and what timeline should we be looking at? That then I can be able to say that I have been able to fully implement a gender finance program, and what is the cost element roughly? Then I can be able to see whether as an institution I can be able to pick it up and then start working with it.
Okay, so thank you. Thank you again, Edmund, for the question. So timeline, if I say 3 months, would you argue? No, you can actually do it in 3 months. If you put the resources and you are committed from the top of the pyramid of the institution, so the top management is committed, you set a project team and you go through the phases that I just showed you in the presentation, you can actually do it in 3 months. If you want to take your time with it, you can do it in 6 months, let's say, but all I would recommend is phasing the program. You're not going to do everything from day one. So it is one segment or several few segments of women, sub-segments of women that you're addressing, and then you move on to scale the program to the rest of the segments. The budget is not much, by the way, so I go again and say it's an investment, it's not a cost, because you will differentiate yourself from competition. You will acquire a bigger market share. So this is considered an investment, and it all depends on what you want to do as a financial institution from the whole program. But one thing I would say, you can reallocate your budgets. So let's say you have a marketing budget of $20,000. I'm just saying any number. You reallocate that budget from saying we're the best financial institution in the country to actually putting it on training programs, because when those women are trained, they will become your promoter. So instead of we saying we're the best institution, let them experience how we really are great with our full-fledged program, and they will become our advocates and will refer customers to us. So reallocating budget is the answer. Did I answer your question?
Yeah, but I was looking at the figures that you quoted, and I'm looking at a small business like mine that has just about 100,000 Ghana cedi, which is less than $20,000. And if I'm going to use that to do that, so maybe it will call more for partnership, collaboration, and looking at the bigger picture. If there are international agencies that are also there, like development partners that will help to be able to do this in a bigger picture, then that will help cushion some of these costs that we have been exposed to.
Indeed,
yes.
Thank you, Edmund, for mentioning this point. So I was looking at it from only an individual perspective, but really with partnerships, you will be able to actually do this even faster.
Okay, yeah. Right. Your final question I want to ask. I'm still waiting for other people to ask questions, but I think that some of these questions addresses some of the issues that they are faced with. Let me ask this. Is the application of the gender lens sequential, or financial institutions can just prioritize and implement some parts or components of the gender lens? I was so much focused when you were talking about those stages of the gender lens. I wanted to find out whether we have to follow it, somebody would say holistically, as you presented, or we can just prioritize it at certain point in time. Yes. Your take.
Yes. So the prerequisite would be looking at our data, identifying really the gaps that we have in our systems, in our processes, in our resources, in and then identifying who do we want to actually target. So this is only a prerequisite. And then you phase the program, as I mentioned. So maybe you decide that you're going to be looking at 4 subsegments of women, but now you're going to be addressing today, when you want to launch the program, only on one woman segment, and then you roll out to the rest. The rest is sequential indeed. So you have to know who your customers are, you have to know what your capabilities are, and you have to know where you're heading, and then develop your products and services accordingly, and then align your institution, train them to be gender smart, and then do your marketing campaign and launch the program. But when you launch the program, make sure that you have a set of key performance indicators that you're going to be monitoring, and later on allow you to recalibrate your program if you're not able to reach those targets.
Right. Thank you very much, Maya. There are some people who are saying that they are also very interested in the cash flow lending. I think that most of the time the focus have always been on the collateral type of lending, and people are looking at the new phase because the kind of customers that we deal with are people who do not have collateral even in the first place. And these are some of the issues that you mentioned in your earlier presentation, that these are the challenges that women face when it comes to funding in terms of the activities that they do. I think that one of the things that I also established in your presentation was the fact that there is a lack of information, especially when you look at the micro, small, and medium scale enterprises, where to be able to fish information when it comes to the financial institutions and what they can be able to offer them. So I think these kind of gaps, as we deliberate, GAMFIN and any other financial institution will begin to now look at what are the ways and means to be able to bring together. A lot have started in the system, and I know that this will push us to also do more. Thank you very much. This is all that I have for the day. I think Nathaniel will pick it up. Thank you.
Thank you, Edmund, so much.
Okay. Wow, all too soon. The webinar is wrapping up. We want to especially thank you for attending this webinar. And then when we were starting, I made mention that this webinar is being recorded. So with that, the webinar, the recording and the presentation will be posted on the CAPLAS First Plus part of the GAMFIN website. And then everyone who registered for this webinar will receive an email that includes the link to the recording, the presentation, the assessment tool within the next few days. Once again, we want to thank you. And then with this, we'll be ending the webinar. Thank you, Maya. Thank you, everyone, for attending.
Thank you, everyone, for attending and really for actively listening and engaging. Hope to see you soon in Ghana. Bye-bye.